The CMO Confidential podcast is a proud member of the I Hear Everything podcast network. Looking to launch or scale your podcast? I Hear Everything delivers podcast production, growth, and monetization solutions that transform your words into profit. Ready to give your brand a voice? Then visit iheareverything.com.
Welcome to CMO Confidential, the podcast that takes you inside the drama, decisions, and choices that go with being the head of marketing. Hosted by five-time CMO Mike Linton.
Welcome, marketers, advertisers, and those who love them to Chief Marketing Officer Confidential. CMO Confidential is a program that takes you inside the drama, the decisions, and the politics that go with being the head of marketing at any company in what is one of the most scrutinized jobs in the executive suite. I'm Mike Linton, the former CMO of Best Buy, eBay, Farmers Insurance, and Ancestry.com, here today with my guest, Rob Ward. Today's topic: a top venture capitalist analyzes the AI landscape. I know you're laughing.
Which part was in air quotes? The top part or the
top? Well, you know, we have a lot of leeway, journalistic leeway. Now, Rob is the co-founder and general partner at Meritech Capital, a highly successful late-stage venture capital firm in Silicon Valley. He's worked there for over 26 years and invested in companies like Facebook, now Meta, Snowflake, NetSuite, Zipcar, and Cloudera. Full disclosure, I've known Rob and his firm for many years and consider him to be one of the best at explaining what technology actually does. Welcome to the show, Rob.
Thank you, Mike. Great to be here. Long-time listener or first-time caller, though. So
first-time caller, right? I hear you, Seattle. So first question. Rob, where are we really in AI adoption? You've seen adoptions over 26 years, massive ones. Tell us where we really are today.
Yeah, it's the right question. My honest take is we're still so early. And I say that not because there hasn't been a lot of activity, and we'll get to that. And there's certainly been a lot of hype. So it's not, I'm not saying it's early in the sense nothing's happened. A lot is happened in a very short time period. It's kind of a remarkable to think ChatGPT only came out 3 years ago, right? Yeah. And obviously, we've had AI for a long, long time in the sort of ML sense of machine learning sense of AI, but generative AI being relatively new. And I'll also say there are some specific areas where it's moving very quickly, right? AI for writing code, companies like Cursor, like Anthropic's Claude, Cursor went from 0 to 1 billion in over 2 years. Legal AI, another area where you're seeing a lot of activity. Harvey, Legora, Harvey's over 100 million in annual revenue. Search, Glean, rapid prototyping of web apps, Lovable. So there are some companies with staggering growth rates. And just to put that in perspective for your listeners, we used to think getting from 0 to 100 million in revenue in about 8 to 10 years, that was best in class for decades. Yeah. They kind of get down to, that was the sort of the Salesforce DocuSign era. Then it got down to like 3 to 4 with Wiz and CoreWeave. Now it's like a year. These companies I just mentioned, many of them, it took 1 year to go from 0 to 100. So there's a lot of explosive growth, but it's specific to these certain areas. And those are businesses that are either targeting developers, early adopters of new tech, or businesses where the fit between generative AI is just, hand in glove, like legal, perfect example, right? It's text in, text out, sort of tailor-made. Beyond that, it's still a lot of experimentation, especially when you talk about the enterprise world, right? Enormous pressure to do something, right?
Enormous.
Like, give me a win, let me get out there in front of Wall Street and say that, we're an AI company. But it's a slog, right? Getting widespread enterprise adoption is not easy. Getting these deployments into production, really hard. But it's coming, right? 90% of IT budgets are going to be up next year. And of that 90%, of them think they're going to increase their AI spending. And, so, I mean, don't get me wrong. And the vendor spend, that's where the real action is, right? I mean, as in, I can't,
when you say vendor spend, tell our listeners what you mean by that.
I'm talking about, the hyperscalers, the companies that are actually building out these data centers to run AI, and then the AI platform providers themselves. The best statistic I've seen on this topic, there is a renowned venture capitalist, a guy who's been around for forever, named Roger McNamee, and he made the point that by the end of 2025, the tech industry will have invested about $750 billion over the last 3 years into LLM AI and that infrastructure supporting it. And if you believe that that's a trend line that will invest a relatively comparable amount in the next year, that the AI industry will have received more capital than has been invested in the rest of the tech industry from the dawn of Silicon Valley, right? In sort of the mid 50s when the transistor was invented. And I mean, that's just it's
staggering, but the valuations are going with it, and the hype is going with it. So how do you, as an investor, think about these valuations? Because it's like, and also the circular investing thing that's going on. How do you look at that? I mean, as both an investor and an industry observer.
Yeah. It is. It's challenging, to say the least. First of all, I have, people are like, is there a bubble? The bubble question. We might as well address it because I know it'll come up at some point.
Yeah.
And there's no doubt this is a bubble, right? I mean, something like, if you look at the public market, something like 80% of all gains this year
are coming from here.
That's right. If you just pull out, the public markets are not really performing very well, but it's totally clouded over by AI. And by the way, there's also this huge bifurcation. If they say you're an AI winner, you trade at many multiples of revenue.
Oh yeah, we're changing our name to CMO Confidential.ai.
Perfect. AI Confidential, even better. And in the private markets, as you point out, you're right. The valuations are extraordinary. And this, I've been around long enough. This doesn't end well. And it's not just that valuations are going up, by the way. It's that there's a lack of oversight creeping in. It's that rounds are happening at an unbelievably accelerated
And when you
rate.
say rounds, that he means investment rounds where people are just taking money without, I'm going to say, as much due diligence as they might historically have applied.
And to try to make it, to put a point here, it's not unusual now if we're investing in a company, let's call it the Series B round, before that Series B round has closed, another investor has come to the company and said, hey, we'd like to put money in at 2x the price of the round that isn't even closed. And so, you're having the Series C happen,
right away,
a month right after the Series B. It's absolutely, just not a great fact pattern. Okay, but I'm not done with the terrifying part.
Okay, go ahead.
The other thing we have to worry about is there's this phenomenon of what is known as AI washing, right? The practice of every company, just what you were doing with your own podcast name.
Yeah,
exaggerating your company's AI use or capabilities, and every deal is an AI.
Oh no, Rob, we use it for the newsletter and some other things, so we're really early adopters.
And I will say, the technology, the underlying theme that's going to come out here is this technology is moving so rapidly, and therefore, what is really successful today, there's a lot of question about that long-term viability of that business. And remember, I'm not a public investor. I can't just decide tomorrow, hey, I don't really like this business anymore. There's a better one over there. I'm going to sell it. I'm in this thing, Sometimes,
because when a VC invests, they're in. They can't get the money out until another round or someone buys them out. So
these are illiquid securities. And yeah, a competitor can leapfrog your technology. We're seeing it already in AI, again and again. And the switching costs are so low. So the cost of being wrong here is just, extraordinarily high. I mean, just to give you a sense for this durability of revenue concern, we looked at a legal AI company a few 18 months ago, 2 years ago, and we did a diligence call with a really well-known legal firm in Silicon Valley. One of the customers that you absolutely like to have, and the feedback was extremely positive on this AI software. And we got to the end of the call, and of course we said, well, so you're going to buy this, right? Because he was just running a proof of concept where they get to use the software for several months and try it out. And his response was, oh, God, no. Why would I do that? I built a little thin veneer, that sits on top of this AI software between the users and the software. And, once the POC is done, I'll go grab the next great thing because there's be something that'll be way better. And I'll just unplug this and plug that in. And my lawyers won't even know the difference.
And that POC is proof of concept.
Yeah.
So, yeah.
So that's, and I guess there's one more thing I'd point out. Unlike in 2000 with the internet bubble, the startups had a big advantage because the incumbents were basically catatonic, right? They were asleep at the wheel. It wasn't really a big fight back. That is not the case this time. Who's leading the charge here? It's Microsoft, it's Google, it's Amazon, and these are, formidable competitors, right? Highly ambitious. They've got great leadership, very, very strong.
Limitless resources almost,
Yeah. But, okay, so that's all the negative. Let me give you the reason, though, that people then are still, leaning in or jumping in. VCs, we live for platform shifts, right? That is, it's not wholly untrue to say that as a VC, you make all your money in these periods. Like and in between, you sort of just try to keep your head above water until that next big.
Yeah, and a platform shift would be, the digital revolution, mobile 2.0.
Got it. Cloud computing, mobile, farther back, obviously the internet, farther back.
Social,
There's just been waves of them, right? And it's not also, really unusual to say that this is the mother of all, waves and
no, one of our guests, the authors that wrote AI First said, this is the biggest prize in the history of capitalism.
You got it. So, you are not, as a venture capitalist, you do not want to miss out on this. Is your moment to shine. Maybe nothing like this ever again in your career. And so, that's why, despite everything else I just said, there is an unbelievable amount of activity. And to be fair, there are all kinds of really interesting startups doing great things and succeeding. There's also some advantages to this AI wave that startups never had before. I mean, part of the challenge or the trade-off, I guess, let's put it this way, is startups always were able to, deliver a much simpler product experience, but the incumbents would win still because they could configure things and customize things in a way that was really useful for that individual purchaser. Consulting firms and folks like that really make the playing field more difficult for startups. With LLMs now, they can enable configurability and customization in a really rapid manner, and so it's given startups equal footing, so to speak, in terms of fighting the battle on the large incumbents battleground. So it's a super terrifying time, but it's a super exciting time too.
So we talked a little pre-show about how you gauge how these companies turn profitable, especially during the investment phase, and then also if you're going to adopt these as a company. The switching costs may be small now, but if you really get everybody trained on one or two of them, how's the switching cost later? Yeah. How do you guys think about that when you look at profitability, sustainability, like companies that are going to win and companies that are more focused and are going to get eventually passed, bought, or crushed?
Yeah. To be fair, and we did joke about this to begin with, we don't really look at profitability. I mean, the farthest out we will look at is when will this company become cash flow positive? Becoming profitable even is often, many, for at least several years beyond that point in time. And I will tell you, that is, there's always a bit of a trade-off between growth and profitability, right?
Yeah.
Growth, it's easier to get profitable if you grow at a slower rate, because almost by definition, when you're growing more quickly, it means you're having to, hire more developers and hire more salespeople, and you're layering in more operating costs. Now, that has definitely flipped a little bit here with AI, and it's a big part of it is because companies are able to get to market so much faster with such lower levels of headcount. There's a famous story about the Cursor coming to market, and it was like a 3-person team that actually brought the product out originally. That's a little bit of a hyperbolic example, but it's directionally right, and we see this even when in our own portfolio, right? It's not unusual to see companies that have gotten to tens of millions of revenue and their headcount is 10 people.
Right.
You will see some of these businesses become a little bit more profitable, certainly at an earlier stage. Not to say they still aren't raising huge rounds because of these big valuations. And I might also say venture capitalists are partly to blame. There's a very terrible term going around called the Foie Gras Effect, and it's basically larding startups with capital until they burst. And why is happening? It's because, again, the average venture fund has grown so big and has so much capital, they're just desperate to find places to put it. So even these profitable or relatively efficient companies are still raising massive.
Well, that's a foie gras bubble. I mean, the foie gras thing is now stuck in my head. So we're also seeing all the circular investing. You have the foie gras thing. We just had the CoreWeave announcement where they lost $40 billion in valuation almost in no time. How do you think about all this circular investing, and then Amari's law, that you're underestimating now, and it's going to have an effect later? How should our marketers be looking at this when they are evaluating what to do?
Yeah, it's a problem. It's real. I mean, don't get me wrong. Real dollars are being spent and chips are being shipped, but a lot of it is circular. Now, it's a little better than what we saw in the .com boom, right? Where it was
that was just trading money. I mean, that was circular. Yeah.
There were no real assets. Here, there's some physical assets, right? So it's much closer to sort of the Nortel Lucent vendor financing deals back in the day. Again, those didn't end well either. Balance sheets are a little better to begin with, but the sheer scale means that even with healthy balance sheets, it's eye-opening. And the scary part is so much of this data center spend, I'm not even sure it's going to pay off, even if it gets done properly. And here's what I mean by that. As an example, there's these companies called neoclouds that are like Together and Lambda, and they basically they're cloud providers, they're startups that offer a GPU-centric architecture, right? Tailored for AI workloads. And you'd say to yourself, why are these companies, able to succeed? The hyperscalers, the Amazons, the Microsoft Azure, the GCP, Google Cloud Platform, they've got tons of data centers. The reason is those data centers are not optimized for AI. It turns out the value of a data center it's highly dependent on the specific use case, right? And back to what I said earlier, but AI is changing really rapidly. So will all this construction that's happening today even be the right kind of data center architecture in 5 years? That's far from clear. That's
a big question.
Let me layer on another sort of scary thought. again, this technology is progressing incredibly rapidly. So how do we really know what that demand is going to look like? Because this speed and scale of improvement means it's impossible to forecast demand, right?
So I just have to ask this. So essentially, if you were building ships, I'm doing an analogy, and data centers are ships, and you are building battleships.
Exactly. It's a perfect
And
example.
5 years from now, you realize, oh, this is going to be an air war. I should have built carriers.
Yep.
These battleships are not usable. You have to scrap them and build aircraft carriers.
Yeah, great analogy, right? You can be, parading your great white fleet around the globe like we did in early 1900s, and then suddenly realize, uh-oh, this really isn't where the game is, the puck is moved. And the proof of how tenuous this is starting to become is just look at the way the finance world is starting to react to these deals. Credit default swaps. Boy, we all thought we'd never hear that term again after the mortgage financial crisis of a decade ago. The purchase of those, by the way, has exploded in the last.
Tell everybody how a credit default swap works in just a couple sentences.
Yeah, you're betting against something, right? Back in the financial crisis, you bet against the housing market. The big bet that paid off spectacularly was that we were packaging together and selling these mortgages, that were all subprime, but as packaging them together and washing them and saying they were prime. And so it's essentially a bet insurance policy against an investment. So you pay a premium to the seller, and it pays out if that borrower, in this case, the borrower defaults on a loan. So you're betting.
And so back to my analogy, I'm saying you're going to be building all these battleships, and I believe you're going to need carriers. That's so right. I am buying a credit default swap against your battleship.
Yes, exactly right. And the biggest targets now are Oracle, they're CoreWeave, they're all the businesses that are, the less creditworthy in this great game that's going on right now.
So if I'm sitting there listening to this show, and we have a lot of C-level people listening to this show, and also a lot of agencies and consultants, how should they be picking vendors or picking people to play with in this market?
Yeah, I think the best thing today is to choose someone that's fits under the umbrella of a trusted advisor, right? This is not a technology bet alone, because again, as I mentioned, things are moving so rapidly. What you really need is somebody that you trust can help you navigate, those twists and turns. And the other part of it is you need somebody who can help educate your team, right? This is, again, incredibly tumultuous period. You need somebody who has exceptional client experience, right? You need somebody who can help you with change management. This is, and when we can get in the topic of why some things are succeeding and why some things aren't. I think this is a big part of it, right? You have to have that approach. You can't skip that. You can't. Don't skip the people part, right? People are.
Yeah, we did a whole show that the hardest part about AI is the culture.
Yeah, change management. I mean, it sounds boring, but it's absolutely true, and it's doubly true here because expectations are so out of control, right? People think this is black magic. It's going to solve everything, and they're going to so they start applying it everywhere all over the organization. Not the way to adopt AI, right? Small,
focused use cases. But here's some of our other guests have said, you got to have a use case. You got to actually watch it really hard. And then you got to put this into the org in a way the org accepts it. But we've also had a couple of guests say, don't be buying small little answers. Like go with a frontier model. And then if you want to buy some small answers, great, but don't be messing around with a million little startups.
Correct.
If you're a big company. What do you say to that?
Yeah, I think that there's definitely a time and a place for that. But again, it gets back to who's going to be there. Who do I trust can deliver, a successful outcome for me? sometimes startups are the ones that will give you the most attention and be the most, give you the most bespoke solution that allows you to win. The other thing I'd say that people skip over is it's not, the people that see the real results aren't just the ones that have the most advanced models, but it's the ones that can manage the complexity of the data layers. Said another way, there's no AI strategy without a really sound data strategy.
Give me a good example of someone managing the data layers really well.
Well, here's the way I would say. First thing is, you need to have incredible context. You need to know, AI is at some level a black box. And so therefore, how are you going to trust the output of these models unless you trust the inputs? Where the data is, and who touched it and whether it's, the freshest data. The puzzle analogy is a good one, right? The data are the pieces of the puzzle, but the context that you need is the image on the box, right? Allows you to sort of put the pieces together and transform it into action. And, shameless plug, we've got a portfolio company named Atlan, and this is what they do, right? For large organizations, they provide that data context layer. And it's very different, by the way, for AI than BI, right? People will say, "Oh, I've got a data strategy for business intelligence." Sorry, that's BI. That was sort of the world of data in before we had AI.
Right.
But it's totally flipped, right? In BI, structured data, rows and columns was really easy. The unstructured stuff was hard. Now it's the reverse. Unstructured is actually easier for AI. That structured data, you need a context layer, because here's an example. I could say to you, what are our high value orders that are at risk, and how's the AI going to know what I actually mean by that? What's
at risk? Or if I said I want to go on vacation, it could give me 100 vacations, but it would have to know what I kind of wanted.
That's right. Right. And by the way, the AI is never going to say, "I don't know," right? It'll hallucinate.
No, and no matter what you ask it, it always says, "That's a great question, Rob." I like how it treats me that way. Yeah.
Praise is our my colleague and your close friend Paul's Madeira's favorite phrase, right? Frequently wrong, but never in doubt.
Never in doubt. Yes. Hey, so if I'm sitting out there and I'm watching VC patterns, because I want to pay attention as a marketer or a business person, what could I be watching in this industry to just increase my knowledge base?
Yeah. I think it's here's the way I'd say it. I would say it's you want to dive in, right? Now is the time, if you haven't already started. Yesterday was not too soon, and where we have seen success, at least within our portfolio companies, and even with our firm, and I'll talk a little bit about how we use AI. But as a marketer, start again with those easy wins. Bring AI to initiatives that you're already employing, that you're already using, doing manually, but you can't properly scale, right, without hiring a ton of humans. So you're sort of rate limited without using AI. So what do I mean by that? What's in that bucket? Targeting, right? More data leads to much more accurate sort of lead scoring. Content personalization. And we've got a great company, shameless plug number 2, called Clay, that does this.
You're doing a great job of getting these in subtly.
I'm a venture capitalist. What can I say? But
we'll do PR training separately.
They will be able to use specific phrases, used by these prospects in the past, and bring that into the content that you're creating back to these individuals. So it's that level of detail. At the same time, avoid the stuff that's really elusive, right? Certainly the creative stuff. AI, everything I've heard, it's still unable to come up with sort of out of the box ideas. Even intent, that's very, very specific to your product and market, and it's not often easy to do. Looping to how we use it. There are areas that you experiment, you figure out, and you rapidly iterate. You realize there's areas where it's really useful. I mean, researching a company, incredibly useful. I mean, we do it in deep research mode. It'll take 20 minutes, but you'll get a prep pack on a company better than any associate could ever pull together. We'll do it for note taking. We'll do it for translating text to voice so we can listen to something while we're driving. What we don't do it. We don't use it for sending emails to founders. It's just not good enough. It's still the very definition of AI work slop. I'm sure you've probably heard that phrase.
No, it's one of our guests said it's like having a bunch of well-intentioned, earnest 18-year-old interns working for you.
Yeah, best of intentions, but boy, the product is just not good enough. So yeah, that's the way we can learn from how we're using it for sure.
Hey, so beneath all this, there's been a lot of people that have said they're laying off all these people because of AI. But beneath what you just said, that hasn't even really happened yet. Are these layoffs real? And what's really happening down the road here in terms of actual jobs?
Yeah, I mean, certainly you are reading about layoffs. And I think unemployment's at a 4 or 5 month high right now. But I'll be a little cynical. I mean, it's the ultimate free pass, right?
It's a free pass, you bet.
Enterprise CEO whose business is, flailing and they need to cut heads. It's like, oh yeah, we're going to, So I'm sure there's some of that, going on. I'll give you an example that's just too good not to share. There's a company called Klarna. I believe it's a public company now.
Oh yeah. They're deferred payments.
Yes, exactly. And the CEO is he's a bit sensational. He announced. This guy first announced a few years ago he was getting rid of all his SaaS. He was moving off SaaS and going completely to AI, and getting rid of Workday, getting rid of Salesforce, which he did get rid of. He failed to mention though that he actually brought in another one of our portfolio companies. Okay, I'm up to 3. Pigment, which is a great company to do a lot of his work. But so this is who we're dealing with. So he came out about a year ago and said, I'm going to lay off all 700 of my customer support people and replace them with AI. This is AI can do everything. I don't need humans anymore, blah, blah, blah. Well, just a few weeks ago, he said, turns out the effectiveness is degraded a little bit. And I'm actually going to be bringing some humans back in customer support. So I think, the truth is somewhere in the middle. You're getting these bold statements because back to that change management thing, you need to, one way to get your team to act and to act aggressively is that, you sort of have to plant the flag aggressively and be the strong leader to motivate employees because nobody likes to change. I mean, everybody's comfortable, in their same old. So I think that's a lot of it. There's no doubt it's harder for a younger developer to get a job.
Yeah.
I mean, what we see is it's really the low end jobs. They're the tougher ones. I think this is true even in the marketing organization, right?
Without a doubt.
AI it's a godsend for a CMO, but there's certain people lower in the organization that, it's going to be tough. On the other hand, I'll say there's areas like demand gen that, you're gonna need humans. So it's not, it's unclear, right? It's obviously going to have an effect, but I don't know if it's going to be as dramatic as the headlines portray it to be.
And if you were advising our listeners on questions, a killer question or two they should ask either candidates or potential partners on AI, do you have any great questions they should ask to say, yes, you are really AI savvy, or you really get this?
I don't know that I have a super original answer other than, just explain to me how you're using it in your, what in your day-to-day life today. How have you brought it in? Where have you seen success? Where have you seen failure? You just you need somebody who is, an AI native. That's what you're looking for, right? To hire every new hire you're bringing in, whatever level you're at. You want the people, one of the hard things for technology companies is finding the early adopters, the evangelists, right? It's a broad product. Obviously, if you're selling accounting software, right who to go to. But you're selling Tableau, it's a business intelligence software. Everybody uses it. How do I know who the right people are to target? And I bring this up because this is the kind of person you want to bring into your organization, the one that's willing to try the new technology and to figure out ways to have success, and then also broadcast that success throughout the organization. That's, you can't have enough people like that right now.
Yes. If you want to, Rob, we will list all your portfolio companies in the comments if you want to send it to us when we post the show.
I haven't even gotten to our new AI investments.
I know, but we'll just do it for you. Hey, before we get to our traditional last question, is there any free AI thoughts or advice to our listeners on this topic that you want to share that we haven't talked about?
What else is interesting to me? I think the other interesting thing to think about or look at is the whole safety question. I mean, it's just, I'm not really talking as much about national security and nor even the black swan, AI is going to take over the world. It's more
Right.
just where are we headed, and how do we make sure we are using AI in the most socially responsible manner. Maybe this is a hot topic for me personally, as somebody who invested in social media companies and felt pretty let down by their inability to make progress on that front. I think the national security stuff is fascinating too, because it impacts safety because we've got China to deal with here, and they've come out with not only really promising open source frontier models, but thanks to our sanctions, those were the best things for the Chinese semiconductor industry than anything else in the world. Also, you look at the amount of data center capacity that they're adding relative to the U.S. It's a little alarming. So that's a whole nother topic. But we may
have to do a whole nother show, in late 2026, where you look back on this. So we are now to our traditional last question. It's a two-parter. You can take one part or both, but you have to take at least one. Funniest story you can share on the air, or any practical advice we haven't discussed yet.
Yeah, and I mentioned I was going to bring up yet another Meritech portfolio company, but this one, everybody.
You are a PR person's dream, Rob Ward. I mean, you are really just bringing it.
But this one everyone already knows about because it's Astronomer, and for the one person listener out there that wasn't aware of what happened with the Coldplay concert this summer, just look it up online. And I'm not going to get into the actual incident, but I think the aftermath is not only a pretty fun story, but it's also a great, it falls under the good practical advice. So the incident in question required the company to remove their CEO and remove their head of HR and do it really rapidly. And since this whole thing went viral, we really had to change the public perception of Astronomer and, change that narrative and pretty quickly. And what came next was pretty inspired. I'm guessing you've seen the video I'm referring to with Gwyneth Paltrow. Yes. Do you know where the source of that inspiration for that video was?
No, tell us the people that haven't seen the video. Tell us about the video and tell us the inspiration.
Well, the video itself was just, I guess people, the comments afterwards were like, it was a case study in crisis management, an absolute masterclass, because it had Gwyneth Paltrow as a temporary spokesperson for Astronomer. The rub being Gwyneth used to date Chris Martin.
the Coldplay lead singer. Yeah.
And she said, look, I'm sure you have a lot of questions about Astronomer. And it started, with a question popped up like what the actual blah, blah, blah. And she said, yes, I know, Astronomer is the best solution for building data pipelines. And so it totally reframed the scandal and humanized the brand and sort of cleverly, tied that ad back to the event and just, completely moved beyond it. By the way, also created a ton of awareness. That wasn't even the goal, but the number of impressions they got was like as good as any flagship ad, campaign for any software company ever. The point of the story is that whole inspiration came from Ryan Reynolds. Ryan Reynolds, the actor. Ryan Reynolds personally made sure that ad was run to the point there where his ad agency, he waived his fee, did it for free. He said, I know how to totally change the narrative here. I so want to do this. I can deliver, Gwyneth. Let me have at it. And, it was incredible. So the practical advice is, if your company ever finds itself in a very public and embarrassing situation, you want to get down on your knees and pray for Ryan Reynolds. I mean,
so the end here is good, but I wouldn't advise anybody to go through the process.
No. But things happen, right? And the guy did it for Peloton as well. I don't know if you remember those ads, but
Yeah.
the advice is don't run from the issue. Don't hide from it. Own it and laugh at it and alter their narrative. So that's my advice for the day.
Well, I think that is a great way to end the show. Thank you for joining us, Rob, and thanks to everyone for listening to CMO Confidential. If you are enjoying our content, please like, share, and subscribe. New shows drop every Tuesday, and you can find all of our more than 150 shows on Apple, YouTube, and Spotify, which include Colonel Mustard in the Study with the Job Spec, What Your CFO Wants to Tell You But Won't, the AI application layer, the good, the bad, and the ugly, and why can't. Hey, all you marketers, stay safe out there. This is Mike Linton signing off for CMO Confidential.